Maybe we can start with a round of introduction. Who are we? What's the panel? And maybe also listen from you. Who's listening to us? So maybe George, do you want to introduce yourself?
Yeah, sure. My name's George Hilton. I'm a research manager at S&P Global. We are a global provider of market intelligence for the renewable energy industry, amongst other things, and I personally focus on energy storage.
Great. Nice to have you here. Patrick? Patrick?
Yes.
Patrick, can you please say 2 words?
Yeah, for sure. So very warm welcome from my side also. Patrick, my name, responsible for our battery storage department within Goldberg Solar, as we're an utility EPC, mainly focused in Europe, but also Canada and overseas.
Erika?
Hello everyone, my name is Erika. I'm a battery storage engineer at DNV. DNV is an independent advisory and consulting service, provide advisory and consulting services. I believe many of you already know and have been involved or worked on projects with DNV earlier. And I'm quite interested to be a part of this panel here and looking forward to the discussion.
And Camille?
Good morning, everyone. I'm Kapil Jaiswal, working as a project manager in the asset operation at BayWa Re. With nearly 10 years of experience in the energy sector, I had the opportunity to design battery rooms and hydrogen installation in coal and nuclear power plant facility to oversee operation and maintenance for PV assets, as well as with utility scale battery projects and hydrogen pilot projects in the Netherlands. So today's discussion is actually, I'm quite enthusiastic because from personal experiences, we are facing a lot of grid curtailments for our renewable assets, and I'd like to, excited to hear more and discuss about the topics in the panel.
Great, nice to have you, Camille. So, hello everyone, myself, Farid Komati. I'm a manager at Afri Management Consulting. I've been in the business for 10 years now. Mostly working on power system flexibility, smart grids, and decarbonization strategies for energy utilities. And as you all know, the German market has boomed for batteries in 2022, and we've supported many investors in doing transactions, commercial and technical due diligence, buy side or sell side. I've worked on also the strategies of some developers in Germany, as well as big utilities to go into the sector. So that's my contribution to today's discussion. Before we start, maybe just a raise of hands so that we can know who's the audience we are talking with. Just I'm wondering who are investors in this room, if someone can raise his hand, who are investors. Okay, we see 3 investors. That's interesting. Who are battery developers in the room? Okay, we have 3 battery developers, battery and renewable energy, I assume wind and solar, okay. Who are suppliers of battery energy systems? We also have a battery, okay, supplier. Who are supplier of solar in the room? Okay, we have some solar. Okay, we have a diverse audience. Who is a grid operator maybe in the room? Is there a grid operator? Okay, no DSO. Okay, that is the important one to have, but he's not here. Okay, so how we're gonna moderate today's panel? Just to let you know, just like I'll kick off a bit, give a bit overview of energy storage in Europe. What are the enablers, the barriers, and then we want to a little bit give each other the word on the technical aspects, so standalone or co-location, where do we see the trend going, what are the technical designs. We want to talk a bit on technology, so lithium-ion, sodium, redox flows, what are the different durations, and most interestingly, regulatory and market barriers. I think we're going to keep the focus a bit on Germany, but we're going to also talk about other countries. What are the business models, and does grid curtailment, market curtailment, do everyone understand what is the difference? So I think we're going to start a bit wide and start and funnel it to the bottom. Christian is here, okay. So originally Christian was going to moderate, so I'm going to give back the word to Christian.
Okay, so thank you very much, and sorry, I was caught up in another activity, and I think we miss a chair as well, yeah. So thank you very much for inviting us. We are very lucky because we have a very generous panel today and extremely diverse. So I hope to extract the maximum value from all these colleagues. Let me introduce you myself first, and I will let the word so that they can introduce themselves. So my name is Christian Barba. I'm the Director of Storage in EDP Renewables, which is a utility company. We have been developing storage since 2014, so we have a bit of experience there in many countries. However, I mean, you know, I'm always the person to whom the questions are addressed, and today I'm the one asking the questions, so I'm really relaxed and happy today to be in this position because we have a very demanding topic. Without further ado, I'm passing on the mic so that my colleagues can introduce themselves.
We already did, so...
Okay.
So
Thank you very much for that. Then. So let me then explain how we are addressing this topic. Now, the topic today is about how storage can help with the grid difficulties that we've been seeing. And I'm gonna, just set the context. And afterwards, we're going to break this topic in 4 blocks. The first one being about the technical aspects, then we'll move to the technological aspects, then regulatory perspective, and finally, we'll discuss about the business models to finalize with final comments, with some final notes from my colleagues, from the panelists here. Just as and then we will have some Q&A if we have time. We're going to move fast, but first of all, we all know here that renewables is growing a lot. From 2020 to 2030, renewable is going to quadruple, and then up to 2050, it should triple as well again. If we are to reach the net zero path, and of course, this is generating, we're starting to see a lot of disturbances. From one hand, we see the cannibalization of prices, and by today we've seen that more than 200 hours of negative prices have been happening in the day-ahead markets across Europe, in almost every country. But that is bringing also congestion in the grids, and that is also, these two effects are bringing also curtailment by the system operators, and also by the operators, by the private operators, due to these negative prices. And this is also generating instability in the grid, and all this finally reflects in the system cost, a higher system cost that is to be paid by the customer finally. So all of these issues are also, specifically this cannibalization of prices, are reducing the capture price by specifically PV or solar profiles, but also other renewable technologies, and this is, in the end, reducing their profitability and making it less attractive for investment. So, in this context, we all have seen that storage is, or should be, one of the solutions. Of course, it's the paradigm of flexibility, and we all would like to see storage solve all these circumstances. And in this context, I would like to ask my colleagues, how do they see this context? If they've been experiencing this situation recently, I don't know, someone would like to bring their experience in this context? Maybe Kabil, yeah.
Yeah, of the recent years, we have seen a lot of negative electricity prices in the day-ahead market, especially in the Netherlands, Germany, as well as in the UK. Like, for example, in last year, on 28th May, we had the spot prices in the Netherlands like minus 400 euro per megawatt hours. And in that entire calendar week, we had instances of negative electricity prices like 23 hours for the Netherlands, 12 hours for Germany, and then 11 hours for France. And combined with the negative electricity prices, we also have the real-time imbalance settlement prices, which also prompts the PPA to curtail the park, curtail the renewable energy assets based on the imbalance prices. And apart from that, we also have local grid congestion, especially in the north of Netherlands, where the grid operators are facing a lot of grid congestion, and as a result of which they are debottling the local grid from the rest of the network. So these are the problems which we are facing, and it's actually a good opportunity for the energy storage market to step in and provide the necessary solution.
If I can add something, I think it always comes down to, I mean, my father always taught me this lesson. I think it applies even in electricity markets. No interest, no incentive, no action. So do you think that renewable plants have the incentive not to feed in during negative electricity prices? The answer is not in Germany. I'm not sure about in other countries, but in Germany, renewable plants built before 2023 can inject as much as they want their electricity during negative prices. If they get curtailed, they're going to be paid back. So grid curtailments, they're paid back, and market curtailments, they anyway get the money back. So there's not really an incentive at the moment for them. The renewable plants built after 2023 can inject for 4 hours their prices during negative electricity price and get paid back. So they also do not want to store. If it goes above 4 hours, then they start to think about it. And then the new renewable plants that will be built after 2027 or 2028, I'm not sure when exactly, then these plants will only allowed for 1 hour of reimbursement. So these plants could start thinking of storing their electricity in a battery storage. But again, then the second question comes, does the battery storage plant wants to store this electricity? Actually, there is no incentive for him to always store green electrons. So if there is such a rule that you have to store green electrons, then you can start thinking that the battery storage plant will want to store these green electrons. Otherwise, for the battery storage owner, he wants to charge with what the market is paying. And if the market is paying me with gray electricity to store, I'm going to get paid. I don't want to store a zero-cost electricity. So it's all about incentive. So no incentive, no action, and we need to design the right incentives to reduce market or grid curtailment.
Thank you for that very interesting point. And now we are, in this context, digesting some of the forecasts for installation of or commissioning of storage across the globe, but specifically in Europe. Well, more than 100 gigawatts should be commissioned per year by the end of the decade, and in Europe, above 30 gigawatts. Now, we see that so far, most part of it is behind the meter, it's in households. But how do you see these figures? Do you think they are achievable, or is just a matter of the need? I don't know if, maybe, yeah.
Yeah, I mean, 100% achievable. You look at the supply side, we have an oversupply at the moment across all the major clean energy technologies. The costs for energy storage have halved or down to a third of where they were just 1 or 2 years ago. And so from a supply side, completely achievable, no matter how big the numbers get, almost. There's technical and difficulties around manning and actually building the things. But then I think the bigger barriers really are around the market creation at that level. The business case for energy storage right now is very risky. We've completely saturated ancillary services across Europe. That's not going to change. And so we're moving towards a place where wholesale arbitrage and capacity markets are building up the bulk of new energy storage installations. But that's much riskier than ancillary services. You can't get a contract to absorb all these negative prices. And so we need to develop new solutions to de-risk that investment and provide a longer-term contract for the investors in order to do that. There's a couple of different ways that that's starting to happen. We had a first tolling agreement in the UK announced last week, which is a kind of third-party way of doing that. We could have flexibility CFDs, that's been spoken about quite a bit. We could have broader levels of procurement from a centralized, the TSOs, etc. But the key thing that needs to happen from the business case is de-risking. And if we can do that, then yeah, for sure, the sky's the limit. We have all the supply and we have all the market opportunity.
Yeah, I also totally agree with you, George. I mean, technical-wise, also, it's not rocket science. Yeah, we're using same inverters as for PV installation. We're using same transformers as we do for PV installation. And yes, we're a storage container, but again, this is not rocket science. Technical-wise, what we have to work on is financing for sure. So banks have to step up also and actually allow investors to invest in projects so they can actually be built. And then on top of that, challenges that we see as an EPC is also that especially grid providers have, and I have to say it quite hard, have no clue about battery storage. Yeah, and they did not really inform themselves. So there has to be a lot of work from our side also to tell them of how a battery storage system would actually work.
I don't fully agree. If I may add, you mentioned that batteries is a very risky business case. Don't want to scare off investors. Actually, the fundamentals of flexibility are very strong, especially in Germany. I know that in the UK the ancillary services has saturated, but at the end we are going in a new energy system where volatility will be king, and you want an asset that is able to capture this volatility. So we like to call it, in terms of the battery team at AFRY, you have a flying horse, which is basically flexibility need. And we are trying now to shape it in a different way with having toll agreements and everything. But banks in Germany, we have started to engage with them. We've done workshops and educated on that merchant risk that they're taking, and they're actually starting to agree to the fact that yes, we know that there is decreasing revenues because there's going to be cannibalization, but there's such a Wachstummarkt, it's such a growing market that there will always be a need for shifting away energy, so that I'm willing to take the risk to go merchant and I will make more profits. And by doing so, I'm willing to give 50 to 70% gearing ratio to finance such an investment. So maybe yes, in Europe it's different, maybe the case is different, but the German market has shown to be, banks are showing to be willing to take that risk.
Yeah, and thanks for making that point. It's a super, super important one. I guess the question I have for you is that something that can be scaled up to the gigawatts? Because, you know, it's happening on a project-by-project basis in a relatively small scale. Mm-hmm. This is huge infrastructure investment. Is that kind of investment structure scalable?
I mean, yeah, very good question fired back. Definitely we are now in the 1 gigawatt range in Germany. The TSO had said, has agreed and approved, the BNetzA has approved the TSO plan to go to 24 gigawatt by 2037. It's a big number. We don't know if this is going to be realizable with good IRRs, but eventually, yes, there is some new mechanism, like let's call it floor prices, where we're offering a minimum and then we're taking, it's going to be a mix of options. I don't think we can say, oh, we all have to go to tolling agreements or we all have to go merchant. We're going to see some different financing options, but yes, at the end, such assets, because of the fundamental need of electrifying heat and transport demand, removing 40 gigawatts of coal plant, and having today 150 gigawatt of wind and solar, doubling it by 2030 and tripling it by 2040, you have a lot of variations, and you need flexible assets. That's why the fundamental need is here.
So thank you very much for this very interesting exchange. I think the discussion is set. We know that solving the grid with storage is not an easy thing. It's still not clear. There are different paths, different uncertainties, and we'll be deep diving into these later on. I wanted maybe just to take a step back, because we know that we believe that it is, possible from the investor side, or might be reachable. Of course, people working in the storage industry, we are always optimists, so by nature. But I don't know, maybe from a technical standpoint, how do we do this? We see that there are, the components are there, the technologies are somehow mature, some kind of technologies, but how do we do this? How do we design these storage assets? What type of assets do we install standalone, co-located for these purposes of the grid stability in this context? I don't know, Erika, if you can help us with that. Is it possible to solve the grid or improve the grid with batteries technically and with this type of configurations?
Yeah, thank you for the question. So we do know what the targets for the European market is by 2030, 2045. Yep, all good. We are scaling. We saw how the growth in the storage market occurred since 2018 or 19 and how it has reached in 2023 and how we are forecasting it for. That's all good, but all said, grid infrastructure is going to be a critical pain point in developing the energy storage projects. And one of the ways that we could think of, solving this or mitigating this grid limitation would be in thinking about, okay, what about co-locating the assets? Yep. And now the big question comes, standalone versus co-located assets. I know that there's a session later in the noon. I believe they would discuss more about on it. But just from my point of view, co-located assets or hybrid assets could help a great deal in solving the grid limitation or the problems that we face with the current grid infrastructure. But to the contrary, at least in Germany, as of now, what we see more and more is standalone assets rather than co-located assets. And now the question comes, why, right? So it's because of the business case and the incentives, or it's the current scenario in Germany is there's an incentive to the developers to bring their products into the market very soon. And as you know, at least in Germany, that the grid fees is exempted for projects for 20 years if they come into COD before 2029, and which means that developers are more and more interested to bring their projects into the market before that. And a standalone asset is more faster to develop, and therefore there are more and more standalone assets in the market at the moment. But whereas in Netherlands, it's probable that there are more standalone assets, but given the grid congestion and the difficulty in getting a grid connection in Netherlands, there is a higher demand or a higher trend shift towards co-located assets. So it's more about, weighing the pros and cons of standalone versus co-located.
I will add here that in Eastern Europe, because I'm representing an investor that is present more over in Eastern Europe side, the co-located storage capacities are the way to do it, because there is no business model for the standalone projects in Eastern Europe yet. Moreover, in Romania now we are developing the business model for standalone and co-located projects. So co-located storage, it's mandatory to be added to the PV or to the wind projects in order to to face the cannibalization which is reaching currently in Eastern Europe based on the low cost of developing the projects.
Thank you very much. I think that we could maybe complement this discussion by bringing the regulatory perspective and the development perspective you've also touched upon. And what are the barriers that we are seeing from that angle for storage in Europe? I don't know if maybe Marco, you could help us with that?
Yes, Christian, thank you for the question. So I will first make a distinction between what is normally defined as a market or a regulatory barrier, and we usually have to face this as developers. Obviously, the system is going through deep transition, decarbonizing, passing for centralized to decentralized generation at the same time. Our politician and the regulator wants to ensure the minimum cost of making this transition, but that means going with new technologies, and that means a deep need of changing the grid rules, the connection rules, how you actually, for example, staying on an example of battery storage, how you give the right to storage to access to the local grid, how do you count them in terms of ensuring grid stability, and so on. And so you can see, obviously, this is everyday debate today, all the series of regulation has been changed also here in Germany to give the possibility to storage, to access to markets, and to access to the grid. So the reform of double charging, big debate a couple of months ago, the possibility to connect to a local level, that will be, in my opinion, a big subject in 2 years when the grid will become scarce in Germany. And so try to count exactly what a battery is in terms of grid stability. The big subject of giving the possibility of battery to co-locate, because grid is scarce, why not connect to technology on the same points, and so on and so forth, give access to the batteries to existing markets. And this is an enormous effort that our regulators have to have in order to give the possibility of batteries to play and generally to enable decarbonization. But then there is a second aspect that was already named before, that is, even if tomorrow morning all the barriers are eliminated in Germany, from the morning to the evening, still there is a technical maximum how much I can make in terms of revenues and gross margin with the batteries today. And the interesting thing is that if you go and look what usually consultants calculate as the deployed capacity for battery theoretically in 2030, given the current market and regulatory conditions, is completely different to what the institute is saying, what is the amount of battery that should be installed for a minimum cost of system. So this is, in my opinion, the other big barriers. It's not only necessary to level the playing field to make the batteries participate as of today, but also recognize to the fact that if I install 1 gigawatt of batteries, I reduce the cost of the system consistently, and there is no one to pay for it, and so you have to have the possibility for batteries to enter the market. So this is a hidden barrier that not always is seen.
Yeah.
Okay, can I add one barrier for Germany on the regulation for co-location? It's quite simple. You cannot be qualified as a. It changed. It might have changed 2 weeks ago, but until now, you cannot qualify as co-located if you are not charging with the renewable electricity that you are co-located with. So that means what happens? You cannot charge your battery with gray electricity when the market prices are more interesting, and hence your business case is much less attractive than standalone. So as simple as that. So it's.
Yeah, just adding on to your point. Yep, so if for co-located assets, if you co-locate a battery with a solar or a wind asset, then the battery project or the project loses its green card status or the green status, and it's no longer attractive, or it's not serving the purpose of being, the renewable storage unit. And also another one of the barriers, especially in Germany, for co-located assets would be in terms of permitting and contracts. So it depends on if the owners of the two assets are the same or different. If they're same, okay, then it's a much easier process. But if the owners are different, like say, for example, if the solar park owner and the batteries project owner are different, then of course in Germany it's going to have a lot of hassle and complications in terms of permitting and contracts and everything. That's also like, a negative point, and it's not as attractive for pushing forward to co-located assets, at least for now.
Indeed, that in the end there are some support mechanisms that are already in place here in Germany and are appearing in other countries as well. And there's also the discussion about the capacity market here, which is a big swing in the market configuration here in Germany. So making the transition to this business model, are these things going to help, or going to support, are they expected, or not? What's your take on this?
As a financial manager, I will say yes, that the storage capacity will help a lot the renewable energy sector, mainly because it's creating a different market where you are going to play. As I was referring only to Eastern Europe countries, I will say that currently, at least in Romania, do not exist, let's say, a market for the batteries or a business model in this perspective. Now it's creating. We are creating ancillary services, grid services, but moreover, the investors that have already put their money in Romanian market are looking for developing storage capacities in order to create a more profitable business model. So, and also keep under secure the balancing cost, which is very high in the Eastern Europe. So we are discussing about different perspective of the markets, but indeed the storage is necessary for these projects. Moreover, from bankable perspective, if you are looking for PV projects, and if you are looking now on Romanian, let's say, daily market, you will see that we have already facing negative prices, even if we are having only few projects operational in Romania, because the grid is populated by other resources. So adding storage to these PV parks and wind parks will create again different markets where to sell the current renewable energy.
Thank you. Yeah, you want to comment?
Yeah, on the business model, because we work a lot on this. It's simple in Germany. The business model is currently fully merchant and is location independent. So what does this mean? It means that batteries today do not need any incentives in Germany to make double digits IRR, because the market, you can make money in the day ahead, the intraday continuous, and then you go into the ancillary services, you can do money in the FCR, so frequency containment reserves, primary control, and the automatic frequency restoration reserves, that's the secondary control market. So basically today, batteries are merchant and location independent. Now the capacity mechanism, like you said, is being developed in Germany. There's been a draft. There is some work happening. Shall we include batteries, yes or no? We now currently believe that yes, they will be included in 2030 maybe or so, and this can add an upside to the business case. There would be also new upsides to the business case in Germany, because currently batteries are not used in redispatch. Redispatch is the biggest cost for now for TSOs. There's like $4 billion that were spent last year for redispatching, and batteries are not used by TSOs in redispatch because TSOs don't know how to pay them. But they will have to eventually be integrated, because the European Market Directive has called for redispatch market-based mechanisms. So there will be eventually a market for redispatch in Germany, and so therefore you can imagine that location will become interesting for batteries in Germany in the coming future. There's also reactive power services that would also become market-based in Germany. Hence, we can foresee that the business case is moving from fully merchant location independent to fully merchant location dependent.
Yeah, that's a great point, because we always think that part of the discussion that you were having before revolve around the appetite of utilities. So it's clear that utilities can finance their projects of their books, of their own balance sheet. Also that they need flexibility, but to a certain extent. And a market can start with that, with some fulfilling some appetite from utilities, but it's clear that with that we are not going to get to the figures that are needed, the amounts of storage that are, or flexibility that are needed. So that's why I think that this evolution of different remuneration schemes are needed, because there are different risk appetites, different profiles there, and the investment is needed. So how to attract that investment to storage? Any ideas here? I mean, you've mentioned some tools, some hedgings that are used, like floor agreements, etc. But do you see a need there to make this project bankable, to make the project financeable?
I think Pablo is the best to speak about this, because the Italian market is totally different than the German market, and I think we have an Italian in the room, so.
Yes, Marco, please.
So yes, thank you for the question. But I think that we have seen in the longest standing market in Europe how the revenue and the gross margin evolution goes for energy storage in times of saturation followed by new services, and this is the UK. Revenues in UK went in waves with enormous peaks in some years and then enormous dips in others. If you make your count, you see that in the peaks, you basically pay your capital of the battery in 2 or 3 years. That is very, very good. This is not usually a business model that is really appealing to normally to banks, especially if you are in those years in which the revenues don't look so good. So there has to be some belief on the need of the system to batteries to invest on batteries per se. But obviously, as you were saying, there is the necessity also for the states to recognize the value of new installed battery capacity with long-term schemes of any type of sort. And we are seeing a lot of effort from this point of view from the aforementioned capacity markets that is quite widespread in Europe and will probably be adopted in Germany as well in the next years, to other type of tenders. Direct incentives for long-duration energy storage, either in the UK, or for example, for the Italian example that we were discussing, in which the government basically recognized that with the market as it is, they need 9 gigawatts to reduce curtailment north-south on the renewables, and the only way to do so is to open a tender to procure that capacity through a tolling agreement. So the government is saying the market is not capable to give me 9 gigawatts, I will take 9 gigawatts, and the overall cost of system will be reduced. And the tender is called MACSE, and the tender will be 71 gigawatt hour of battery storage that, as we said before, will mean that in 2025 and 2026 we go to tender. In only that tender, the equivalent of double the total overall installed capacity in Europe for 2023. So massive intervention with a rationale behind it. I think we will see this example more and more in the next years.
Totally, and that's something that we are seeing at at European level, that there are divergent or diverse approaches by each country. Of course, it should be that way because the mixes, the configurations, and the needs are completely different from a country to another. But this new electricity market design has been preparing, or adapting all these possibilities to the different markets to be able to use them as tools to promote or to accelerate the implementation of or the installation of storage. And here in Germany, it's very specific. Of course, when we talk about the capacity markets as an incentive, sometimes, of course, we see it as a subsidy, a pure subsidy. And for a market like Germany, which is an energy-only market, it changes a lot, the mindset. However, it's, in my opinion, storage is contributing beyond what is being remunerated for. And this is something that sometimes has to be recognized somehow by a fixed payment, by a de-risking element, and it's of course bringing reserves. Every market needs reserves, need backup power, even if it's not using them, but the TSOs need them, so you need to pay for that. This is one of the things, but beyond capacity markets, this electricity market design has been putting in the hands of the regulators the possibility to implement flexibility markets as well, as a complement, only in the case where capacity markets are not enough to move to incentivize storage. And of course, we see business models profitable in UK, of course, in Germany, in Italy, we see these mechanisms. In other countries, we are still far from that, and we are relying on subsidies or one-off subsidies, etc., to trigger that. How do you see that in the different markets? You see these flexibility markets appearing like in Italy, or you see other approaches that are more suitable? For instance, in the case of Germany, we've talked about the capacity market, but maybe there are others, I don't know, the evolution of the innovation tenders, avoiding this charging from the renewable component, adding guarantees of origin to store energy, etc. These incentives could work, or what do you have in mind?
To talk about Germany, I think it is already highly interesting for investors to go for especially standalone products. Yeah, so the business case is there, and return rates are, in my opinion, really, really good. Yeah, so already with the arbitrage frequency regulations, with the models that are available already. Yeah, so I do not really see why or what is holding back investors and investing in batteries, and they are doing that more and more now. Yeah, yes, financing is still a problem again, but talking about Germany specific returns, especially with the price dropping so high for the system in total, there will be more and more and more standalone projects, which then will be limited, the standalone market, in my opinion. So 2 or 3 years we'll see nearly no PV installation without storage anymore added, in my opinion. So that's what I can contribute for Germany at least. Yeah.
Is there someone from Greece in the room? Okay, probably not. But I think that Greece is offering capex reductions for batteries. and this is like a sort of an incentive to bring in more batteries, because you always want to look at island systems have a higher flexibility need in general, so that's why Greece, UK, Ireland are high on the list on interesting markets that need flexibility on one hand, and they are giving sometimes subsidies. So I know about Greece, but I knew about Italy, but I wouldn't say I would be aware of other subsidies being given.
Fantastic. I think this is a very transformative moment in the industry with an always evolving regulation and new schemes every day that are keeping our regulation and markets department always busy. But yeah, it's an interesting moment to live in. I think you've touched some points about other technologies. And my question is, or my thoughts are, if we are still trying to stabilize a business case, business model for typical batteries, either standalone or co-located across all the countries in Europe, specifically in Germany, what about the other technologies that are not as mature, longer duration storage or other types of flexibility? What are your thoughts on that? Do you see Germany ready for that, for these new technologies?
I can take this. I'll give some thoughts, and I'm keen to hear how other people are thinking about alternatives to lithium on the panel. But lithium's getting harder and harder to compete against. Supply, as I said before, supply is way up. We have far more lithium batteries than we are using in cars and that we can install on the grid. That's pushing prices down, means it's harder to compete against. On the second side, the kind of products that are becoming available for energy storage are more diverse. As a developer now, you can go to an established supplier, an established system integrator like Fluence, etc. You can get a fully warranted product, everything's taken care of. So that's one option. You can go and buy what's called an AC block, where you have all the batteries put into a container, there's the inverters as well. That's another option. And then you can go to a DC block, which is just batteries in a container and sort the inverters out yourself. So there's a lot of options for developers. That's also driving down prices. So when you compare that against alternatives, we have this hugely growing industry around energy storage. It's achieving massive scale, and it can reach the gigawatt hour scale very, very easily. How do you compete against that when it's at very low cost and it's bankable? It's very difficult. When we look at that, there are some things that we think are really important there. They are first decoupled energy and power. So what's the marginal cost to add an additional kilowatt or kilowatt hour to your project? Is the kilowatt hour component incredibly cheap? It has to be really, really cheap to beat lithium ion. And then only if you can do that, then it might be competitive at 10 plus hours. So that's one thing, decoupled energy and power. The other thing that's really important is scale. These technologies need to, I call it standing on the shoulders of giants of other industries. And so a really good example of that is compressed air. Most of the technology for compressed air exists already in gas and steam turbines. It's a very established industry that can be deployed pretty quickly at large scale. And so there's an advantage there. Not all technologies have that. Most of them are fairly bespoke and fairly small. So that's number two. And then number three, can you bring that online quickly? We've got the Maxitender in Italy. We're talking about projects in 2025, 2026, at the multiple tens of gigawatt hours scale. If you're a flow battery company or high density pumped hydro or some other kind of niche energy storage technology provider, are you able to bid into that tender? I don't think so. You probably can't bring on the manufacturing capacity to do gigawatt hours of scale in a year or two's time. So those are the three kind of acid tests for alternatives to lithium ion, and when you apply that, the only competitive technology is compressed air, and it's only competitive above 12 hours. So that's something I have. But keen to hear how the people actually buying and installing projects are thinking about it too.
So that was very interesting. Thank you very much. I think that we are not, we're short of time, and I would like to invite my colleagues in the panel to briefly mention what are their views on the future. How do they think flexibility can be dynamized or built into the system beyond these lithium-ion batteries, or what their companies are doing, what technologies they're betting on, etc. To finalize and then to move to Q&A.
I can follow up on the technology as a closing point. I think we never know what the future holds for innovation. There is now talks about lithium air technology that can offer 100-hour storage with lithium, with a round-trip efficiency of 45–50%. That would be better than hydrogen, which is at a 35% round-trip efficiency. So we could think that this technology could be interesting. There's lithium flow batteries, 36 hours, 70% round-trip efficiency. There's a pilot in Germany. I think there's innovation in the space that could disrupt the storage case. But yes, lithium prices have dropped down because there's an oversupply. But there's also, if we look a bit more than just the 2030 terms, when electric vehicles will come in and the demand of lithium for electric vehicles will be eaten up, you might see again a rise of prices. So markets are dynamic. You got to find the right supplier. I think it's a very exciting field to be in. That's why at least I'm here, and I think my colleagues are also here. So I would say, yeah, we cannot crystal ball the future, but we can give directions, and we can say that flexibility is, I don't want to say the new gold, but is definitely something to look for in the future.
Yeah, and again, just as mentioned, battery storage is such a new technology for the market still, but I think even with those significantly price drops, incentives are there, projects are bankable, projects are really, really profitable at the moment, so we will see more and more actually investors and companies coming into the market, so we can actually start and try to work on the demand, which is coming hard, yeah?
Thank you.
There is no doubt that the energy storage industry is quite a happening industry for the moment. There's never a dull moment. And I think some of them, they have already mentioned about the other technologies, but looking into just the lithium technology for the moment, with dropping prices and with the competitiveness in the market, I think it's quite interesting to see how the future of the lithium ion or the lithium battery storage space is going to be. And I'm quite excited to see how it's going to shape forward and to see how the business cases are going to transition from what we have currently and what is going to be attractive maybe in the next or after the next 5 years, and how the technology itself would adapt, or what are the new changes coming into the industry. I think it's going to be quite interesting to see. And of course, you can't predict to that extent, but looking forward to that challenge.
Yeah. From asset operation point of view, in the coming 10 years, it's going to be really interesting with different stakeholders, as Erica had mentioned earlier, regarding permitting and other stuff. And as the grid operators at the moment upgrading their grid infrastructure in the coming 10 years, this entire risk mitigation with curtailment and energy storage solution is going to take a rampant ahead. But with sector coupling provided with nice off-takers, the sector coupling will also come into the picture probably later after the lithium storage gets into the picture. So, yeah. And also the effect of degradation on the components in the asset point of view with so many curtailments, and at the moment there's no clear picture of how the degradation of component will look like, but it's going to be an interesting phase in terms of asset operation in the coming 10 years.
As a developer point of view, we are looking for a stable cash flow and also for flexibility. So it doesn't really count what the technology we are going to use, but I believe that the storage it will be a plus for the renewable energy sector. And we will need the authorities to create a very nice work area in this perspective in order for us to have a market where to use the storage capacities.
Yeah, same from development standpoint. Obviously, we firmly believe in lithium-ion now being an very important element of the transition as it is today. Specifically, we have 4 gigawatt-hour of storage project under development. We believe in it, but I would be extremely surprised if the same panel in 10 years were speaking about the same type of technology or business model with the arrival of new technology, long-duration energy storage, the arrival of integration, of the aggregation of electric vehicles and others, and whatever else will come out in the next 10 years. We believe in it. I think it will be fundamental, the development of it, but we are also very ready to change as soon new technology will be mature and new business model will appear.
Fantastic. Thank you very much, all the panelists here, for their amazing contributions. I would profit these couple of minutes to open the mic to the audience if they have any questions about all the topics we've been discussing. Yes, please.
Hi, I'm Dimitar from Bulgaria. In our region, battery storage is still underdeveloped, and we expect soon this to be changed. But I have one specific question. Do you think, or have you experienced cybersecurity as a challenge?
Cybersecurity can be an issue, and it's deeply being investigated by all the stakeholders, especially the investors for the renewable assets, because there will be different stakeholders. There will be PPA, there will be battery investors who's going to steer the park, who's going to, and this cybersecurity can be a relevant topic in the coming years.
And you have to notice that batteries are mainly data-driven pieces of equipment. They react to the different markets almost in real time, and that's why all the TSOs are very wary of the data they are providing, because they are of a national security matter, no dimension. So definitely.
Hi everybody, thank you for the very interesting and engaging discussion. And as I know we are heading for lunch, probably very quick question. I mean, everybody here is representing very reputable stakeholders. Now we have the Net Zero Industry Act coming in. How are your companies adapting to that? So we hear things like non-price criteria. We see that it's becoming a very big topic for policymakers where this equipment is being produced. So how do you see that going forward? Is that going to be a topic, or is it already a topic within your companies, or is it something that you expect to start kicking in later this year or maybe next year?
So I think I can reply here to your really interesting question. It's definitely challenging. We've seen this happening in North America, in the United States. And this happened with the PV sector, now with the batteries. Here in Europe, it's coming as well, and it will happen with the electric vehicles as well. So this protectionism sometimes is desired by the industry, other times is not as desired. Here, we need to make sure that we, for instance, advance our capabilities to track all the emissions from the equipment that we are installing, and this will be a major challenge for all the companies, this passport or CO2 passport that will need to be built. But in the end, I think that we are not against making the world smaller. We believe that we need to enlarge the world, but we need, on the other hand, to make sure that we control the emissions. We are sure that we are contributing to a net zero 100%, no? And not damaging one side to improving another side. I think that would be that. I thank you very much for such a good audience, and of course to all the panelists for the contributions. Thank you.